Question 786. A real estate salesperson is representing a buyer, while trying to sell properties listed with another broker. The salesperson is directly responsible to the A. Multiple listing service, MLS, B. Owner, C. Selling broker, D. Real estate commissioner. Correct answer is C. Selling broker. A salesperson always works under the supervision and authority of a licensed broker. They cannot legally act independently in real estate transactions. Even when a real estate salesperson represents a buyer and works with properties listed by other brokers, their direct accountability always remains with their own supervising broker. This selling or sponsoring broker is ultimately responsible for the salesperson's actions and ensuring compliance with real estate laws. Salespeople cannot operate independently. Their broker provides the necessary oversight and legal framework for their transactions. The Multiple Listing Service, MLS, is a database and cooperative marketing system, not a regulatory body or employer. The owner of the property is represented by the listing broker, not directly by the buyer's salesperson. The real estate commissioner is the head of the state's real estate regulatory body. While a salesperson is ultimately subject to the laws and regulations enforced by the commissioner, their direct day-to-day supervision and responsibility is to their employing broker. The broker is responsible for the actions of their salespeople. Question 787. Air rights and water rights are included in the which are transferred when a property is sold. A. Covenants. B. Bundle of rights. C. Basket of rights. D. None of the above. Correct answer is B. Bundle of rights. The bundle of rights is a legal concept that describes the comprehensive set of privileges that comes with the ownership of real property. These rights are often likened to a bundle of sticks, where each stick represents a distinct right. When a property is sold, this bundle of rights is typically transferred to the new owner. The core rights in the bundle usually include 1. Right of possession, the right to occupy and use the property. 2. Right of control, the right to use the property in any lawful way. 3. Right of exclusion, the right to keep others from entering or using the property. 4. Right of enjoyment, the right to use the property without interference. 5. Right of disposition, the right to sell, lease, or transfer ownership of the property. Air rights and water rights are fundamental aspects of real property ownership and are considered part of this comprehensive bundle of rights that accompanies the land. Question 788. A real property lease creates an estate for years, B. Attachment lien, C. Freehold estate, D. An estate at will. Correct answer is A. Estate for years. Estate for years, or tenancy for years, is a leasehold estate that has a definite beginning and a definite end date. It can be for any fixed period, whether it's a few days, months, or many years. The key is that the term is fixed and known at the time the lease is created. This is the most common type of lease created by a written agreement. Let's look at why the other options are incorrect. An attachment lien is a legal claim placed on a property, real or personal, to prevent the owner from selling or transferring it during a lawsuit. It's a type of encumbrance, not an interest created by a lease. A freehold estate signifies ownership of real property for an indefinite period, with no specified end date. Examples include fee simple, absolute, or a life estate. A lease, by definition, grants possession for a limited time, not indefinite ownership. While an estate at will, or tenancy at will, is a type of leasehold, it is characterized by having no fixed duration and can be terminated by either the landlord or tenant at any time with proper notice. A typical, real property lease implies a more formal agreement with a defined term, which aligns with an estate for years. While an estate at will is a leasehold, estate for years is the most direct and common type of estate created by a formal lease. Question 789. After a purchase offer was accepted by a seller, it is discovered that the first trust deed the buyer is taking over is $100,000, instead of the $110,000 stated in the listing. What remedies, if any, are available to the buyer? A. Buyer must continue with the transaction or lose his deposit. B. Since the mistake has reduced the property cost by $10,000, it is to the buyer's advantage and he has no right to back out of the contract. C. Buyer can rescind the contract and get back his deposit. D. Buyer must continue with the transaction or be liable to a suit compelling his specific performance. Correct answer is C. Buyer can rescind the contract and get back his deposit. The listing stated the first trust deed was $110,000, but it is actually $100,000. This is a significant discrepancy and constitutes a material misrepresentation of a key financial detail of the property. A material fact is something that would influence a buyer's decision to purchase or the price they are willing to pay. In real estate, when there is a material misrepresentation, the buyer generally has the right to rescind the contract. Rescission means the contract is cancelled, and both parties are returned to their original positions as if the contract never existed. A fundamental part of rescission due to misrepresentation is that the buyer gets their deposit back. The deposit is usually held in escrow and is returned when a contract is validly rescinded. The buyer is not obligated to continue when there's a material misrepresentation from the seller or their agent. Losing the deposit would only happen if the buyer defaulted on the contract without a valid reason. While it might seem like a financial advantage, the buyer made their offer and entered the contract based on specific information, $110,000 debt. The buyer has the right to choose whether to proceed with a different financial scenario than what was presented. The value difference could impact their financing options, long-term payment plans, or overall investment strategy. The right to rescind exists due to the inaccuracy of the information provided, regardless of whether it's perceived as advantageous or not. Specific performance is a remedy typically sought by a seller when a buyer wrongfully backs out of a contract. In this case, the buyer has a legitimate reason, material misrepresentation, to withdraw, making them unlikely to be liable for specific performance. Question 790. An escrow agent would debit the seller of an income-generating property for which of the following? A. Prepaid insurance. B. Prepaid taxes. C. Prepaid rent. D. All of the above. Correct answer is C. Prepaid rent. Debits are amounts owed or charges that reduce the seller's proceeds. Credits are amounts received or items that increase the seller's proceeds, or reduce the buyer's amount due. When an income-generating property, like a rental property, is sold, rent is typically paid by tenants in advance. If the closing occurs mid-month or mid-period for which rent has already been collected by the seller, the buyer is entitled to the portion of that rent that covers the period of their ownership. Therefore, the seller has collected money for a period when the buyer will own the property. To ensure fairness, the escrow agent will debit the seller for the amount of rent that applies to the buyer's period of ownership and credit that same amount to the buyer. This essentially transfers the prepaid rent from the seller to the buyer at closing. If the seller has prepaid insurance beyond the closing date, they would typically receive a credit for the unused portion of that insurance, as the buyer would usually obtain their own new insurance policy. The buyer would be debited for their new insurance policy's prepaid premiums. If the seller has prepaid property taxes beyond the closing date, they would receive a credit for the unused portion of those taxes. The buyer would then be debited for their share of the taxes from the closing date forward. Question 791. The horizontal lower edge of a sloped roof is called an A. Eave. B. Low point. C. Joust. D. Rafter. Correct answer is A. Eave. Low point is a general term and not a specific architectural component of a roof. Joust is typically spelled joist in construction, and a joist is a horizontal timber or beam supporting a floor or ceiling. It's not part of the roof's exterior edge. Rafters are the sloping beams that extend from the ridge or hip to the wall plate, forming the framework of a pitched roof. While they support the eave, the rafter itself is not the horizontal lower edge. The eave is the part of a roof that projects horizontally beyond the side walls of a building. It's the lower edge of the roof that hangs over the facade. Question 792. Upon the sale of a business opportunity, the seller is required to collect sales tax from the buyer on the A. Inventory included in the sale, B. Goodwill, C. Projected future earnings that will occur in the year after the sale, D. Fixtures and furniture that are part of the business. Correct answer is D. Fixtures and furniture that are part of the business. When selling a business, the seller is generally responsible for collecting sales tax on the tangible personal property being transferred. This includes items like 1. Fixtures. These are items permanently attached to the property, such as built-in cabinets or shelving. 2. Furniture. Tables, chairs, desks, and other movable items used in the business. While inventory is considered tangible personal property, it's usually not subject to sales tax when sold as part of a business. However, if the inventory is for the buyer's own use, not resale, it would be taxable. Goodwill is the intangible value of a business, such as its reputation or customer base. It's generally not subject to sales tax. Projected future earnings are not tangible assets and are not subject to sales tax. Question 793. A broker employed by the seller will owe a duty to the buyer if A. The broker's actions go beyond the scope of his agreement with the seller, B. The sale does not close, C. There is a mistake made in filing the paperwork for a sale, D. None of the above. Correct answer is A. The broker's actions go beyond the scope of his agreement with the seller. The closing of the sale doesn't determine if a duty was owed. Duties exist throughout the transaction process. A mistake in paperwork might lead to liability for negligence or breach of contract, but it doesn't automatically create a duty to the buyer if no agency relationship existed. The duty to the buyer stems from the nature of the representation or actions taken. A broker employed by the seller, the listing broker, has a primary fiduciary duty to the seller. This means they must act in the seller's best interests, including loyalty, confidentiality, disclosure of material facts to the seller, and diligent representation. Even when representing the seller, a real estate broker generally owes certain non-fiduciary duties to the buyer. These duties include honesty, fair dealing, and the disclosure of all known material facts affecting the value or desirability of the property that are not known to, or within the diligent attention and observation of, the buyer. This is a duty to the transaction itself and to avoid misrepresentation. A broker primarily serving a seller can unintentionally create an implied agency with a buyer. This occurs if their actions, like offering advice or assistance, suggest they're acting on the buyer's behalf, extending their duties beyond the original seller agreement. Such an implied relationship would then impose fiduciary duties on the broker towards the buyer. If the broker, or another agent within the same brokerage, represents both the seller and the buyer in the same transaction, this creates a dual agency. In a dual agency, the broker owes fiduciary duties to both the buyer and the seller, but with limitations on confidentiality regarding price and motivation unless express consent is given. Dual agency requires informed written consent from both parties. Question 794. With an FHA loan, a primary benefit to a lender is A. Loan-to-income ratio is higher, B. More robust bond yields, C. Mortgage insurance, D. Alternative financing. Correct answer is C. Mortgage insurance. FHA loans often allow for higher debt-to-income, DTI, ratios for borrowers. This is a characteristic that benefits the borrower by making the loan more accessible. For the lender, it actually represents a higher risk if not for the mortgage insurance mitigating that risk. Bond yields are related to the broader financial markets and how mortgages are bundled and sold as securities. While FHA-backed securities are generally considered stable, the direct benefit to the originating lender at the time of loan creation is not primarily about bond yields. FHA loans are a specific type of government-backed financing. While they are an alternative to conventional loans, this isn't a primary benefit to the lender in the same way that risk mitigation is. The benefit is that they are insured. FHA loans are government-insured. The Federal Housing Administration, FHA, which is part of the U.S. Department of Housing and Urban Development, HUD, does not lend money directly. Instead, it insures loans made by FHA-approved private lenders. Borrowers pay a mortgage insurance premium, MIP, both an upfront premium and an annual premium, to the FHA. This insurance protects the lender in case the borrower defaults on the loan. This insurance significantly reduces the risk for the lender. Because the FHA guarantees a portion of the loan in the event of borrower default. Lenders are more willing to offer FHA loans to borrowers who might not qualify for conventional loans due to lower credit scores or smaller down payments. Question 795. Real estate agents owe a fiduciary duty to their A. Real estate commissioner, B. Title company, C. Principal, D. Fellow salespersons. Correct answer is C. Principal. The real estate commissioner oversees the licensing and regulation of real estate professionals, but an agent doesn't owe a fiduciary duty directly to the commissioner. They owe adherence to the laws and regulations enforced by the commissioner. The title company handles the transfer of title and ensures clear ownership, but the agent does not owe them a fiduciary duty. Real estate agents work collaboratively, but they do not owe a fiduciary duty to other salespersons, even within the same brokerage. Their duty is to their respective principals. A fiduciary duty is the highest standard of care in law. It means the agent must act with utmost loyalty, honesty, confidentiality, and diligence in the best interest of their client. In a real estate transaction, the principal is the client who has hired the agent to represent them. This could be the seller in a listing agreement or the buyer in a buyer representation agreement.